Hello, everybody, and welcome to Smack the Markets Trading Room weekly market wrap for week ending the 28th of September. Now, this week we've not had, let's say we've not had the cleanest of chart structures to consider trading, certainly not for trend following traders, where we like to see the sort of smoothest possible market conditions possible. We've had quite a bit of news rhetoric that's been sort of batting the markets backwards and forwards. China and Trump trade war, of course, have also stoked up the markets, together with sort of Brexit news from the UK and Europe as well. We've also had a few very rich news days as well, certainly towards the end of this week, where we've had pretty much major news announcements on a number of markets every sort of couple of hours. So that's really sort of kept that sort of volatility up. And that's been on the backdrop of market structures which weren't the best and optimal when we came into the week. However, we managed to carve out a couple of trades, and in fact most of the week has been a case of identifying a setup and unfortunately those setups not actually maturing or not actually sort of validating. We did manage to capture a couple of trades here though, so let's take a look at these. The first one was on pound Swissy. Now, this was on the Monday, and the idea of this trade was actually, if we recall, last week, so Friday last week, there was a huge sell-off in sterling on the back of some of these Brexit-related comments. The market was overextended after that move last week, and on the Monday we got the bulls coming back in to take control of sterling. Now, the market sort of rallied up here. In fact, sterling was extremely strong at the beginning of the week, and we were looking to get long pretty much any sterling market we could. So the one that we identified here was Great British Pound against the Swissy, and we traded this market back up towards this level here that we see on the 4-hour chart. In fact, what I'll do is if we come to the live charts, and probably easier to open this up, take a look at this in a bit of context, you can see how strong this level actually was. It was quite a significant level, around 1.26 sort of 23 area. You can certainly see that there's been historical support and resistance there, and we took that piece of price action up to that sort of level there. So if we come back to the slides, we actually got the entry on the 15-minute time frame, and it was the only sort of sterling market on the day that gave us an entry. So pound Swissy gave us an entry on this pivot point here, where the market sort of tested a few times, gave us an opportunity to be able to put a tight stop in without placing our stop behind the swing low, and the market sort of continued. Now, as the trend continued here, the first blue line here was first target. Shortly after that, the market put in a higher swing low, and that enabled us to move our stop from the previous swing up to the higher swing low here to lock in more return. The market sort of continued. We were aiming for this sort of level, and eventually the market continued past that level. In fact, we needed to wait till the following day for that to get broken. So it was up here where we actually got out of the market. So it was just actually north of this sort of level up here. And that gave us about 3.5% on the trade, 3.5% on the move, which wasn't sort of too bad. Having said that, the market, as we saw, did continue all the way on to 128, but we didn't manage to sort of like capture that. This was the value part of the move that we took advantage of. So the second trade that we identified this week that actually triggered was here on Swissy yen. Now, this was an intraday trade short. The idea of the trade, of course, came from a much broader perspective than just the lower time frame. So if we take a look at the 4-hour time frame here, you can see that the market had rolled over. Swissy against the yen had been extremely strong the previous sort of week. It had rolled over, put in a new downtrend here on the sort of 4-hour time frame and lower, and we're looking for this level to get broken. So the market sort of tested the level before, bounced up, put in a lower high, and then we got this break here. Now, if we come down to the lower time frames, we can see the setup that we took. So it was a break. This entry level was in fact the breakout level as well. So you see these sort of lows here. This was the breakout level. We waited for the breakout to occur, and then we identified a cluster setup back at the breakout level. So here we had a pivot point, we had a 50% fib level from the swing move, a 61.8% fib level from the recent leg of the trend, cluster there as well. So we had a whole bunch of things, plus it was support and resistance too. Now, there was some fundamental aspects to this trade as well. And of course, we knew that the Fed were likely to raise US interest rates. That was well priced into the market anyway. Now, an increase in Fed US dollar interest rates would increase the US dollar, and that consequently would reduce the value here of the Swissy. It would weaken the Swissy. So that was the idea of the sort of fundamental support in the trade too. And in fact, that's actually what sort of did play out. You know, eventually the market did roll over, and it moved to exactly where we expected. The problem was that the volatility here was just a little bit too much, and it actually took our stop out before continuing to target. So for this week, we had one losing trade, so down 1%, one winning trade, up 3.5%, so about 2.5% gain in the trading room this week. So not too bad, but a bit of a frustrating week with the sort of condition of the markets. So we're looking forward to next week. Certainly hope this helps, and look forward to speaking to you next time. Bye for now.